Hello, today the title of my lecture is Mastering Breakout Trading with the 20 MA Consolidation Breakout Trading Strategy. So today I'm going to teach you a trading strategy that works very well. First of all, let's just understand why you should trade breakouts. Now, first reason is breakouts are actually quite easy to spot. They are not that difficult. You just need to find a stock or a market that is trading sideways, very tight sideways for a period of time. And then why do you want to trade breakouts is because it offers you great risk to reward. Sometimes you can find 5 to 6 times reward compared to the risk. So, and therefore you don't need a high winning percentage to be profitable. So if you like to learn more about trading strategies, this is part of the series I'm doing, please do like this video and subscribe if you are new, so that you keep posted when I show video on trading. So what is a consolidation actually? The consolidation is actually a sideways trading. There's something you need to answer, whether when you look at the stock, is the stock consolidating or not. So what it does is there is a range. You can actually draw an upper trend line and lower trend line. And the stock trades sideways by going up, down, up, down, up, down, up, down. And eventually the stock breaks out. And what you want to do is to identify the top and the bottom here. And the moment the stock squeezes and breaks out, you want to buy the stock. And oftentimes this move up here can be many more times than the trading range here. And that is why it can offer you a very good risk to reward ratio. Now, how to trade the 20 MA consolidation breakouts? Of course, first of all, you must identify an area of consolidation. And then you need to make sure that the stock is in an uptrend. So we are actually trading a stock that is already in an uptrend, and therefore we are trading with a trend. This is a trend following strategy, and we are not trading against the trend. So the odds move in your favor when you trade with a trend. Then the third thing is you must make sure the stock is trading above its rising 20-day moving average. We're going to use the 20-day moving average, hence the title of my lecture is 20 MA Consolidation Breakouts. Once you identify the trading range, the moment the stock breakouts, you buy it. And then you put a stop loss below the entire consolidation. So this is what it looks like. This is actually a daily chart of Bitcoin. You can see that the stock, Bitcoin itself is already in an uptrend. It has moved up, and then it traded sideways for many bars. So you need at least 5 to 7 bars to consider it a consolidation. We have more than that, and you can actually draw a box over the consolidation. Note the 20 MA was rising, which points to us a short-term uptrend, short-term bullishness. You buy the Bitcoin when it trades above the consolidation and put a stop loss below the entire consolidation, and you can see how high it moved. Compared to your stop loss, is going to give you a very good risk to reward ratio. Now, how to take profits? When you are trading a trading strategy that is following a trend, you must let your profits run and cut your losses short, which is why you don't need to have high winning percentages. But if you follow the rules, you might get a 70% success rate, and you might get 3 to 5 reward to risk. A stock that is strong will rarely drop below its rising 20 MA. So you just let the stock run, and only sell half of it when it drops below the 20 MA, and then sell another half when drop below a swing low. Sorry about this typo here. You can sell half when it drops below the 20 MA and sell another half when it drops below a swing low. Or you can actually even sell the remaining half of the half when it drops below a swing low, and keep the remaining half of the half when it starts a new downtrend in the stock. But you must raise your stop loss to break even, which is your purchase price, to make sure you don't suffer any losses. At least when it hits your stop loss at break even, you're out of the trade and you don't lose anything. So let's go back to Bitcoin. You buy here, you ride it up, and the moment it drops below the 20 MA, you sell half. And here is a swing low, right? And the Bitcoin trades sideways, and the moment it breaks below the swing low here, you can actually sell your remaining half. So this trade, if anyone takes it, will have been a winner. So we're going to look at some chart examples. I'm going to show you example Bitcoin, gold, and the stock FIP. Now Bitcoin is a cryptocurrency, gold is commodities, FIP is a stock. So what is going to show you that this trading strategy works across many different markets. Alright, let's take a look at Bitcoin. This is a daily chart of Bitcoin. You can actually see this is the same example that I showed you just now. What you can do is you can draw a box over it. Right? You can draw a box over it. There you go. Here's the box. You buy it when it breaks up. Put the stop loss here. Notice how it's very near the rising 20 MA. And let's say you take a long position here. Stop loss is here. And well, if it move up to here, your risk to reward ratio is already 6.21. But even if you take profits when it drop below the 20 MA, is 3.59 compared to 1. So every dollar you risk, you stand to make 3.59. But of course, if it goes up to here, you're already making 6 reward to risk ratio. Well, 6 is a lot. You should have you can take some profits off the table, right? Let me just show you gold. Go to US dollar. So, okay. Gold was in an uptrend, and you can draw a box over this. Right. You can ignore the wick, or you can actually do this, or you can actually trade the GLD, which is the ETF for gold, and yeah, much cleaner. Well, let's say you long here, put a stop loss. When it went up to here, you already have the 3.29 risk reward ratio. Even if it drops below the 20 MA, you have a 1.59 risk to reward ratio. This is gold in an uptrend, breakout as it nears the rising 20 MA. And now let's take a look at FIP. So this stock is already in an uptrend, making higher lows, and here is a consolidation. You can actually draw consolidation like this, very near and hugging the 20 MA that's rising. You can buy the breakout here, put stop loss here, and look, it has not even dropped below the 20 MA except around here for a short while. So if you're still riding it, it's a risk to reward ratio of 6.19. Now the key is to always find a tight consolidation near the rising 20 MA. So even if you are correct half of the time, because of the good risk reward ratio, you're going to come out on top. So just now I've showed you some chart examples: Bitcoin, gold, and FIP. This is crypto, commodities, and stock. Well, this trading strategy works across different markets. So isn't it great? You learn one trading strategy, but you can conquer 3 markets. So in conclusion, you have now learned a trading strategy that follows the trend and works across different markets. It offers you a good risk to reward, and do paper trade it and master it, paper trading, before you put in the real money. So if you have enjoyed the video, enjoyed the lecture, and do like this video and subscribe to the channel for more trading strategies like this. I'll see you in the next one.